Good morning, I'm Pete Najarian. This is The Take on this Thursday morning. And looking back to yesterday, well, kind of a tighter day. There was some movement, no doubt about it. We hit the highs, or rather the lows, at the middle part of the day. We got a pretty decent rebound. We look at the Dow, actually did gain about 80 some odd points. The NASDAQ, a little bit different story. Some pressure on the NASDAQ. It kind of bounced around a little bit. It finished essentially flat. It was down just 3 points. So nothing big there. Volumes were very, very low. It was a really kind of well, we call it hump day for a reason. It was sort of one of those hump days. 33 million contracts trading on the markets that we're in, we're averaging about 42 million a day. So for 33 million, boy, that is well off of where we have been. There's no doubt about it. So it did feel a little bit more calm. The highs of the day in oil, in the price of crude, well, it started leaking a little bit, and it was down there towards 109. We've been watching this very, very closely, along with many of the other commodities, just trying to get a feel for what's going on from an inflation standpoint and where some of these things are starting to pull back a little bit and how much of a pullback is expected. But there certainly has been some great forward-looking parts of the market. Sorry about that. I got my phone off. Get that turned off. Sorry about that. I got the volatility index right around 28 yesterday. The 2-year and the 10-year still kind of just flirting around in that 3 area, very, very close to 3. As a matter of fact, we're seeing a little bit of a dip even below 3 today on the 2-year, but just holding right around that 3 area. And the story of the day, it seemed like yesterday, was Bed Bath & Beyond, because it was just so horrific, so awful. Those numbers, those same store sales were absolutely terrible, and just across the board. You take a look at where that stock has come from to where it is trading now, you can understand a lot of the changes that were going on within the company itself. So we look over at energy. It was down, about 3.5%, because we were watching the price of crude as it was starting to move lower and lower and lower. And it was names like ConocoPhillips getting hit. So we had the beta names and the big boy names. We had Chevron getting hit to the downside. We had Phillips 66. We had Occidental. You get the idea. Diamondback. Across the board, everything seemed like it was getting hit, and hit pretty hard yesterday. Materials down about 0.75%. Not huge, but just a continued path to the downside. Names like U.S. Steel and Nucor. Throw in Alcoa. Haven't mentioned that one in a while, but that was under some pressure as well. Financials. JP Morgan, again. Now, I always go back to this. It's interesting because so many people love JP Morgan, and they fell in love with that. But as we are seeing a little bit more pressure on the markets and the financials, you're seeing that JP Morgan's had a pretty substantial pullback to the downside. And a lot of that, I think, has to do with where was it trading price versus book. We brought that up many, many times. A lot of people just didn't want to pay attention to that because of the fact that it's Jamie Dimon. Jamie Dimon's a wonderful guy. Great CEO, done an unbelievable job. But the price of that stock was much higher than many of the others, which I think is why we are seeing it pull back at a much faster rate than some of the others as well. Healthcare, actually a positive. Nice to see a positive. We don't see a lot of positives, it doesn't feel like, in this first couple of months, 6 months of the year, first half of the year. Merck, Pfizer, Lilly, AbbVie, all of those names, very, very powerful moves to the upside. The staples were pretty strong yesterday as well. It's names like Procter, you look over at Coke, you look at Home Depot, look at a Clorox and a Colgate and some of those kind of names. And you can understand that we had a little bit of a move to the upside there, up about 0.5%. But there was a lot of areas of the market that were just getting hammered, and it was a continuation of the selling. Names in the cruise area, CCL, I look over at Norwegian Cruise Lines. I look at APA and Valero, more in the energy space. Airbnb getting hammered. Paychecks also getting beaten down. We talked about semiconductors. As a matter of fact, yesterday we had that put buying in AMD, those 78 puts that they were buying that expire tomorrow. Well, they've already produced. Those continued yesterday. Stock was hanging around that 78 level. Today, you can see where it is. I always like to tell people, when you're involved in the options world, you've got to have a very concrete type of plan. And with that, you've got to be very, very disciplined. So hopefully anybody who was listening to that yesterday and that intrigued them, you've got to be very, very disciplined. Caterpillar, another one of those names. I'll tell you which names that really were working yesterday. General Mills, we're talking about highs. That was a really nice earnings report. And then you take a look at the production from the stock itself. Very nice. You had names like Monster, names like Smuckers. You get the idea. They were kind of going places where they could maybe find a little bit of hiding. Although Meta was also positive yesterday, along with names like Pepsi, and we also had Microsoft. So it was not just fully hiding, but certainly there was a little bit of movement around and certain names that were definitely standing out a little bit. As we get into today, we approach today with the worst 6 months of any year in the last 50 years, just to give you a little bit of a backdrop of where things are right now. So we look over at the markets. The pressure was on early. In the pre-market, down about 350 points on the Dow, down about 155 points on the NASDAQ, down almost 50 points for the S&P. It gets tiresome, but that has been the theme that we've been talking about. And clearly, with 6 months and this being the worst 6 months in 50 years, gives you a little bit of a sense that we've gone through this many, many times. So we did slip. We were down 400, then 500 on the Dow. We are still down close to 500 points on the Dow right now. I look over at the NASDAQ. The NASDAQ has been bumping around as well, but call it down close to 300 points, and the S&P down about 70 points. Crude was 109. It slipped a little bit further. Last I looked, it was in the 106s. It shifts around a little bit. I looked at volatility. We started off the day in the 29s. We've actually eclipsed and gotten up and through that 30 level on a couple of occasions, understandably so, given the market and what we are seeing getting pushed around. Bitcoin, once again, one of those names where we take a look kind of like this and we find that it's back underneath 20,000. So that's something that I think is a lot of folks have got to focus on that as well. Early on, all the sectors were red. Every single sector was red. Nearly all of them more than 1% in the red. We've had a little bit of shifting around and some of them getting a little bit worse. Consumer discretionary was down a little over 2%. Last I looked, it was down more than 3%. Financials down about 2%. They're still about that level. Technology down 1.75%, actually down nearly 3%, about 2.6%. So you can see where we're seeing some of that movement early on that's pushed this market from being down 300 to being down 500, or being down 150 on the NASDAQ to being down 300 on the NASDAQ. A lot can change. We have a full day in front of us, but that's where we're starting off. And starting off, I usually give some of the positives. What's really working? Well, because we're so negative, I'm going to start with some of the negatives. I'm going to kick it off with Walgreens Boots. Not so great. That stock getting hammered pretty good today. The cruise lines, once again, getting it on the chin. We had all that put buying that we were talking about in some of those cruise ships as well. We're looking at Royal Caribbean as one of them. That was something we were talking about yesterday as well on the halftime. American Airlines, United Airlines, Delta Airlines, all in negative right now. GM, by the way, that American Airlines, we didn't get a chance to do this yesterday on the halftime show. We just kind of glanced over it because Phil LeBeau was called in to talk about what was going on with the airlines and some of the suggestions that are out there. But that was going to be one of my unusual option activities. It was some massive buying of puts in American Airlines. Ironic and interesting was the fact that they were not only buying some that were a little bit shorter term, but others that were way out in time. We're talking about going into 2023 with some of the put buying that we were seeing there. So that was something that definitely stood out for me. We saw some of the same type of thing in the cruise ships as well. Then there was names like GM and Airbnb and Datadog and DocuSign. It's kind of the same list, it feels like, each day in terms of some of the leaders, especially when we're talking to the downside. There's some positives out there. Pfizer looked pretty good. Domino's looked pretty good. Lockheed Martin at least was in the green. So we wanted to find a few things that were working out there. But early on, everything was red in the Dow. Every single one of the 30 was down. One of the best performers was actually Intel, which is shocking. And it was only down about 0.5%. But we did get one that got into the green, Travelers. So we see a little bit of something, a little bit of a glimmer of hope and a little bit of light at the end of the tunnel when you see at least one go into the green. But overall, we're seeing the markets underneath some heavy pressure. We've been talking about all these puts that we've been seeing getting bought. And we talked about that yesterday in the halftime show as well. A lot of people out there just concerned about, well, what are you actually seeing? I can tell you we were seeing a lot of puts in a lot of different ETFs is where we are seeing a lot. But some individual names as well. We talked about AMD, but there's been others. We had American Airlines. We've had also some of those cruise ships where there's some massive put activity as well. And then when you look globally, we've had that EWU. We've had the EWG. You look at Germany, you look at the UK, you look a lot around the rest of the world. We have seen some very, very large put buying and in the IWM right here. So there has been some sizable trading going on there and putting us into at least showing us some of the sentiment that we're seeing out there. So on that same theme, I'm going to give you one of my first of two unusual spiders, the SPY, trading 374.50. Got a buyer of 20,000 of the August 357 puts. Those are going for about $8.25, give or take. Those are being rolled down from somebody who had already bought the 364 puts. 20,000 of those were sold, and they're rolling down to these 357 puts. Gives you a little idea. Somebody making a little bit of money, want to take some of that money off the table, and let's push it down a little bit further because maybe there's even more downside. That's exactly what that trade looks like. You always want to keep an eye on that because I like to see trades where the trader's been right but still wants to be in that trade. Next, I've got NVIDIA. I hate to do this, but again, it's the puts that we are seeing bought. Stock trading right at 150, 24,000 of the NVIDIA July 1st. That's tomorrow, July 1st. Those 150 puts right on top of where it is. Stock's at 150, buying the 150 puts, paying about $1.75 all the way up to about $3 for those puts. Sorry that puts seem to be dominating today, but certainly we have been seeing more and more and more put activity in individual names and ETFs, and we've been seeing this go on over the last couple of months. But specifically this last month, June, we have seen a lot of that type of activity hitting more often than we have seen in other times. So it doesn't necessarily mean that they're always going to be right, but that certainly has been the theme that we have been seeing. Folks, if you don't understand what I'm talking about, you want to get that that level of understanding a lot higher, you got to look online. You got to get in books. We've got our book. We love our book, but there's a lot of different other places as well. Bill and the gang here at Market Rebellion do an unbelievable job of educating. I can't encourage you enough to be involved and try to get educated in the world of the derivatives. They really are something that can be very impactful. Folks, have a great day of trading. We'll see you tomorrow.